Good afternoon, good morning, wherever you are. Today is Wednesday, April 26th, and this is a midweek update on the markets. My name is Dan Bird, coming to you from one rental at a time. Just want to do a very quick update to see where the markets are. Let me share my screen and give you my input on what I think might be going on. First off, if anybody's interested in joining my newsletter, there's no charge for it, and I don't sell emails or anything like that. It's really just for sharing my own research that I do each weekend. If you're interested, just send me a note to breakpointtrading@gmail.com and I'll add you to the list, and I'll send you last week's and you'll start receiving it from that point forward. So let me take a look at the S&P first. So last time, I think on Sunday, so today's Wednesday, so you can see these two big red bars. That's Tuesday and Wednesday. Here's Monday. What I talked about on Sunday was that the market is trading in a range between this high and this low right here. And it clearly is coming off that high. Looks like it wants to go lower. In fact, even with some pretty good earnings from Microsoft, the market still went down, although the NASDAQ did pretty well. NASDAQ went up, I should say, but the S&P went down, and it looks like the market wants to go lower. So it's concerning me a little bit that with those great earnings from Microsoft, the market still didn't really make much headway higher. I'm going to look at the NASDAQ in a second, but I just wanted to show what this looks like and how everything seems to be rolling over right now. So caution is advised. We may be headed down to this 200-day moving average around 39.50. We've already gone through the 21-day, which is where I was hoping that we would find support. Now we're at the 50-day, which is a very important support level. Meta reported after the market closed today and actually had really good earnings, so that might make a difference. Let's take a look at the NASDAQ. So here's the NASDAQ 100, I should say. And you can see even after the decline yesterday, it held in there today with Microsoft earnings, but it actually sold off in the afternoon, and it's still below that 21-day moving average. The other thing I want to point out is if you look at this red panel down here, this is the number of stocks above the 50-day moving average. And if you look over here at the number, it says 44% of stocks in the NASDAQ 100 are above their 50-day moving average. Or in other words, 56% or more than half are trading below their 50-day moving average. That is not very much breadth. That means there's only a few stocks that is trying to be supported with. And at some point, that's just not enough to keep the market going higher. So we have to be careful with that. Also down below, the put call ratio is ramping up, and the VIX here is ramping up as well. So we need to be careful about that. If we look at a closer view of the NASDAQ to see what happened, what it looked like today. So if we look at a 15-minute chart, for instance, here's what the NASDAQ looked like. So it took off after Microsoft reported last night, had a great run up into the midday, and then from midday, about 12 o'clock on, it just sold off. That's not a good sign. If it can't hold those highs and keep going higher, it's not a good sign if it sells off like that. We'll see what happens with Meta. Maybe Meta will make a difference because it looks like they had some pretty good earnings. The volatility index did come down some. It started up during the day, but it did come down right at the very end. But it was heading back towards 20, so that's not a good sign either. Even though the 10-year Treasury is still hanging in there around less than 3.5%. But the fact that the NASDAQ ramped higher after the Microsoft news, but then started selling off, says to me, so what this tells me is that market makers are out there wanting to sell into strength, thinking that the market is going to be going down at some point in the near future. That's what I'm reading in this. So market makers are enjoying the ramp up here, and they're selling into the strength. And then at midday, they just kept selling. So maybe they're anticipating either the Fed rate hike, which is on May 3rd, next week, and or the CPI report, which I think is going to come in negative. Actually, it's going to come in worse than they expect. We'll talk about that on Sunday, but that could be what's going on here. Market makers are starting to sell into the strength, trying to get out of their positions. So let's look at a couple of the stocks that I talked about last week. Microsoft here that just reported, and I mentioned on Sunday, I like to look at the relative strength chart. So the gold area is how is the sector, technology in this case, versus the S&P, and it's been looking good. How is the industry, which is the software industry that Microsoft is in, and it's been kind of average, just going sideways until today. And then the blue one is the most important one. How is Microsoft doing versus all of its peers in its own industry group? And while it had been doing better in general, better than its peers, it hadn't really spiked much higher than where it was back here in December until today. So Microsoft did a good job today. They had a great report. You can see here that it was below the 21, almost down to the 50-day, and it spiked higher. Now, it didn't go much higher than that. And during the day, you can see that it is a filled candle. So the way to look at these candles is if it's an open candle, that means it closed higher than it opened. That's a good thing. Even if it's lower when it first starts, like some of these little red ones here, hopefully you can see that. These little red ones, even though they were lower, they closed higher than they opened. So they're open candles. And then the last day, this would be yesterday before Microsoft reported, it closed with a filled candle, which means it closed lower than it opened. But then it gapped higher after its earnings report and also ended with a closed candle. So even though it gapped higher, it still ended lower than it opened. Again, telling me that market makers are selling into strength to get out of the market. So I'm concerned about that. Let's look at a couple of other ones here. This is Chipotle. Chipotle also had great earnings. They're in the discretionary, consumer discretionary sector. That sector has been pretty tepid. The industry group that it's in which is restaurants and bars, has been ramping higher slowly. And then how Chipotle has been performing versus its peers has actually been pretty good, and it spiked higher today. And you can see what Chipotle looks like on the chart. It's clearly has been moving up. And what I talked about on Sunday is some of these strong names, the ones that the market is moving with, if you get into it before earnings, and even if you want to play options, I'm going to talk about that a little bit more at the end of this session. If you want to play options, you should do it before earnings are reported, because many times these kind of stocks will ramp up before earnings. At earnings, you don't know. It's binary. It can either gap up like this or it can gap down. Here's Google. Google, I said on Sunday, looked fairly average. It didn't look like they were going to have any blowout earnings. They might be okay. And this is what happened today. They actually declined. It had a little bit of a uptrend in the morning, but then declined and actually closed a little bit lower than the day before on Google. And you can see the accumulation distribution going a little bit higher. But the important thing is this blue one right here. Relative to its industry group or to its peers, it has been awful going all the way back to December. It's been terrible the whole year. So I did not expect, and I mentioned this on Sunday, I did not expect for Google to perform too well after earnings today. Meta. So Meta just reported tonight. Let me look and see what they're doing. They are up $24 or more than 11%. So clearly they had great earnings today. Meta looked like, and I mentioned this on Sunday, I thought Meta would be one of the better ones. Meta and Microsoft, I thought would be two of the better ones for earnings. And you can see here versus their peers, this blue one here, they have clearly been outperforming their peers. The gold one, how is the sector doing? Sector's been doing very well. And the industry group that they're in, which is the internet group, has also been doing very well. So Meta did great. Meta actually right now is at 233. So it's going to gap much higher than what's even shown on this chart right here. So that's going to open tomorrow much higher. And then we'll see what happens. If I'm right that market makers are selling into strength, then you might see Meta sell off, gap higher, and then sell off during the day. So we'll see what happens. The next one is Tesla, which reported last week. And we talked about Tesla already. It had a big gap down. And I mentioned on Sunday that I thought Tesla wanted to come down and close this gap. You can see it there in the shaded area. So I thought it would come down and close that gap right there. It ended today right at the top of the gap. So many times when there's a gap like that, it will either reverse right at the top of the gap, or if it goes through it, it will fill the gap. So go down, a little bit below that before it reverses back up. So that gap is between 145 and 155. And I said that was the target that I expected Tesla to get to. So we'll see what happens with Tesla, but you can see that it still is very weak, even after going up a little bit the day after earnings, but it's been very weak ever since earnings, and it continues to sell off. So I would be a little bit careful with Tesla, but depending on what the rest of the market does, and I have a feeling that the rest of the market is going to be rolling over here going into May. Well, I'll talk about that more on Sunday with Zuber. So that's what that looks like. And then Amazon, which reports tomorrow. Amazon is in the consumer discretionary broadline retailers group. It has been fairly basically going sideways. It gapped up here at the last earnings, came back down. It couldn't get through its 200-day moving average, came back up to the 200-day again on Monday and got rejected. And it's sitting right here, right at the 200-day. So that's a very critical point. And that's a point where if Amazon comes out with great earnings and it breaks through that 200-day, there will be a lot of shorts that will have their stops in this area, and that should push it much higher. So we'll see. But based on everything else, and we'll look at the relative chart here on Amazon. So versus its peers, it's been, just kind of going along for the ride. The sector has been slowly declining, and the industry group, which is broadline retailers, has started to perk up a little bit. So we'll see if that helps Amazon at all. But Amazon could go either way when it reports tomorrow. If it goes higher and takes out the stops up here, it actually could keep going. But if it doesn't have a great report, even if it's an average report, and based on the rest of the market right now, Amazon could head actually lower. So be a little bit careful on that one. Now, one thing that I mentioned on Sunday, and I wanted to complete the thought basically. What I said was, for those playing options, this might be a good strategy for options before, about a month or so before these big names, these big stocks report. In this case, I'm looking at Microsoft. Before they report, if you bought 60-day or more out options back here when it breaks up through the 21-day moving average, then just ride it till just before they report earnings and then get out. But what I did not say is which options and what strike price and what time frame would you do that in, which is a very important component of playing options. So what I'd like to show you is, this will be a little bit difficult because it's already gapped up, but I'm going to kind of use the Microsoft chart, and we're going to imagine. So down here it was at about 260 right here, roughly 260, and went up to about 290. So about 30 points it ran right there. So we're going to take where it is right now, which is at about 295, and think about 30 points higher. So at 295, you have a couple of options here. So we could do the April 28th, which is Friday. 295. A lot of folks that play options make the mistake of looking for the cheapest ones. So you could say, well, 295, there's one down here, 297.50. It's only $1.62, which might actually be pretty good if it keeps going higher. The important thing to look at is the delta. You want to buy an option that has a delta of 60% or higher. So that's the first thing to look for. So in this case, we would want this one here, the 292.50 option. These are all calls over here on the left-hand side. So if we were to buy the 292, that's 74%, we would pay $445. But it expires on Friday. That's only 2 days away. So it doesn't have much time to run not only $4, but it has to run more than $4 for you to actually make money. So it needs to run probably $6 to $8 higher in order for you to make money in just 2 days. So the first thing is to go further out in time. So if we look out here in June, let's go to 60 days, June 20. This is June, so this is the monthly expiration in June. That's 51 days. If we look at that one instead, then we could look at the 62%. At 290, that would cost us $15, which means it needs to get to 305 roughly before we start making money. But we have all the way till June for it to do that. Or if we go even further out to July and we look at, again, we look at here's 67%. So 285 will cost us $22. So now it needs to get to 307 or so, 305 to 307 before we start making money. But now we have 86 days to expiration. We have a much longer time frame for that to happen. And here's why that's important. So the first thing is to look at the delta. Don't buy an option less than 60%. That's the first rule. Second rule is when you're a buyer of options, you want to go out as far as you can. I'll show you why in a minute. If you're a seller of options, it's the reverse. You want to have something that is short as possible. And again, I'll show you why here in a second. So if we look at what options do, this is a chart of what happens with options. So this is the time decay that options go through. So if you're a buyer of options and you buy out here between 90 and 120 days, that's the least impact. So you can see that the option starts to decay as you move through time, but it does so on a fairly short or shallow basis initially. So if you get here to 60 days out, it's still okay, but when you get to 45 days, watch how fast it drops off. In fact, 7 days, like the one that we just talked about for only 28 days from now, that one basically is going to decay almost immediately in the next 2 days. Now, if you're selling an option, that's what you want because you want to capture that premium and keep the premium. If you're a seller, you get the premium and you keep it. If it expires worthless, that premium is all yours. So you want it to expire worthless as fast as possible. But if you're a buyer of options, you want to let time work for you. There will always be a decay, but the longer time frame you have, the slower it will decay. And this is why I say, you know, buy it 60 to 90 days out and then sell it just before earnings. Earnings in this case is this week in May, but if we had bought the July options, we would have had plenty of time. So if we had bought this at 90 days, we would have had and sold it in just 3 weeks basically. We would only have this much decay. So that's why it's important when you're buying options to make sure that you understand how they work and buy the right ones. Don't buy the cheapest ones, buy the right ones. So that's all I've got today. I would say, oh, one more thing. Let me show you what VectorVest looks like. VectorVest looks awful. You can see here today, 3 red lights. Again, even after a great Microsoft report, the market sold off. We'll see what happens with Meta tomorrow, because Meta looked like it had a great report. It's still up at $25, 12%. So we'll see what happens, but VectorVest looks terrible. So it's saying do not buy stocks right now or any new stocks. And then if we look at the graph right here, this is the early warning. And I said that it had almost turned red right here. Well, it did turn red today. So it's now giving us a sell signal. This could potentially reverse and go back up if Meta can move the market. But again, really watch it, because this is going to be a telltale sign. If the market makers really are trying to get out ahead of the Fed report and ahead of the CPI, which comes out on May 10th, then this is what's going to tell you. So if the market goes up in the morning and then starts selling off in the afternoon, even with a great meta report, then that tells you market makers are trying to sell into strength and get out of the market. So that's it. That's all I've got for today. Hope be safe out there, be cautious, and we'll have more to talk about on Sunday. We'll talk about the next week's Fed meeting and also the CPI report, which I think is going to be a bad one. That's it. Thanks everyone for listening, and be safe trading. Hope you have a great week. Take care.